Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, April 4th, 2021 episode of DecisionPoint. I'm Erin Swenlin from DecisionPoint.com, and I'm here with my father, Carl Swenlin. And we want to show you the charts and talk about the topics that we think you should know going into this week. So how's everything going, Dad?
I'm fully vaccinated.
Yay! I have my appointment Wednesday morning. I'm very, very happy about that. So I've been looking for availability for so long. And so I guess when I hit 55, that opened the window for me. So all right, well, that's good to know. Let's go ahead and look at our agenda. Of course, we're going to give you the overview of the SPY with our important indicators. Particularly right now, I'm watching the Swenlin trading oscillators very closely. The big four, dollar, gold, crude oil, and bonds. We're going to take a peek at that. Carl will give you his outlook on those. Carl also is going to be talking about the new Pipeline ETF, and it's something you might be very interested in hearing about. I'm going to cover renewable energy and semiconductors. They're really the areas that are seeing a lot of movement, although I have to say renewable energy was a little less than exciting today, which was a little surprising given the blowout all-time highs that we made today. But I think that the chart does require review because I think it still looks constructive and interesting. And then, of course, I'll finish with the diamond of the week. So let's go ahead and get started by looking at our sector scoreboard. Everything's on a buy right now. That means that all of the sectors have their 20-day EMA above their 50-day EMA, or they're on a silver cross, as we like to call it. And then we have the long-term trend model. This means that all of the sectors have their 50-day EMA above their 200-day EMA, or they're on a golden cross. So everything's looking pretty healthy as far as the sectors are concerned. Certainly there's bright spots and not so bright spots, so we'll look a little bit at those. But let's go ahead and get right on into it and look at some charts. Did you want to open with the SPY chart today?
Sure, I can do that.
Mm-hmm. We want your wisdom.
Okie doke. Okay, we had, the continuation of the breakaway we had last week, and although we didn't get an expansion of volume, and it's not horrible like this, but it's less than the 250-day, the 1 year daily average. I always look at this. We got some climactic activity here and on new highs. So we'll follow through on that on the climax chart.
Yeah, that's been really interesting for sure.
Okay, so we have climactic activity on new highs. We also, this is climactic net advanced declines, but the volume's not there, that's for sure. So let's just say kind of an upside initiation climb. No, I'm sorry. That would possibly be an exhaustion because this move has been going for some time. So possibly an exhaustion. So be a little careful here.
Right. And when we say an exhaustion, that doesn't mean we're going to see a huge decline or anything. It's just that we may kind of get stopped up here.
Right. These are short-term impulses, and they can be the start of something big, or they can, be the end of something, and they can just be a momentary pause that the market's going to have to take and do some churning. Right now, I would say look for some turning.
Yes, yes.
So look for some turning at the very least, yeah. Short-term indicators,
Hmm.
this vertical line needs to be moved over one, and you got and a downtick on the STOB.
Yeah, that's interesting, especially on a big day like today.
Yeah, yeah. It's not as conclusive, shall I say, as when we get downticks on something like the Silver Cross, the bullish percent index, that type of thing. These all three of these indexes moved higher, so that confirms what's going on. There's no here we've got this was bullish percent is at 79, which is kind of where we right in this line. So it's not by any means overbought. It's a little weak considering what the price is doing. And confirming on the ITBM and negative divergence on the ITVM. Volume is not picking it up here. So be a little bit careful.
Mm-hmm. Yeah, total volume wasn't very high today.
Okay, and if there's anything else, unless there's something else you wanted me to cover, I'll move over to that new
sure.
pipe. Okay, I heard this on last week on on the Barney show. One of the guests was talking about this new pipeline ETF. Pipelines have my interest strictly because the Keystone pipeline was canceled, and it seems to me that the remaining pipelines, the existing pipelines, could become a little more valuable at this point. Certainly might have a little more interest. One thing about them is that they pay a nice dividend. According to the guest, this one pays a 7% dividend. I don't see that here yet, but it's brand new. It just opened last week, and it's we don't have it's going to have to at least drop one dividend before we'll get anything in this area, I presume. I don't know how long that's going to take, but I haven't been able to verify the dividend anyplace else, so I'm not going to jump on it. I'm looking at it closely because I'm interested in something with income.
Absolutely. Those high dividend payers are certainly the way to go with that.
Yeah, and this ETF is it's actively managed, which means that they're not just taking a nominal basket and letting it run. They'll be picking the ones that look the best and kicking out the ones that aren't doing so well, etc. One of the other advantages of this, a lot of the pipeline stocks, you basically involved yourself in a MLP, which is a master limited partnership. And that's the pain in the butt when it comes to filing your taxes. So with the ETF, you sidestep receiving K1s on the investment, which is, again, gets you away from the limited partnership aspect of it. So this is not a recommendation. It's just something that was interesting to me, and I thought other people might be looking in this area and would like to do something with it.
Nice. What do you think about crude oil right now? We didn't look at the big four.
Okay, crude. I was looking at this earlier. Is this a head and shoulders pattern here? Could very well be. If it broke this support, which was the neckline, we would see a downside target of somewhere around here. I don't see how oil is going to have a major crash or anything. So this could break that line, or we could be just going through a consolidation period here. But for the time being, PMO is falling, so I'm not interested in being long on crude.
Absolutely. I kind of have to agree with you there. A lot of volatility with the Suez Canal, and it doesn't seem to have really helped.
Right. Do you want me to check gold?
Oh yeah, let's do gold. Everybody wants to know about gold.
Okay, gold is picking up. We had a reverse flag formation here, which is bearish and would have taken us down somewhere around here if it followed through properly. But we ended up with a double bottom here, so that is encouraging. And again, it's stalled in this area today, so I'm still not too excited about it. Although the PMO is giving us a nice positive divergence with a higher low and a low above, a bottom above the signal line. So I'm just, I really do want to get back into gold, but I'm just, it's just not doing it for me.
It's
right
just has a tendency to misbehave. I know for me, seeing it stuck there at that 20-day EMA does give me pause. But as you noted, we're looking at a pretty nice looking PMO. I'd like to see that RSI get above 50, but you can't have everything, I suppose. And we are getting more expansion in those discounts, which could be a good thing.
How about let's look at the 10-year treasury yield. That's something that I've been following much more than I ever have, because it's the yield has gone up so much since August, and supposedly that is affecting the big tech stocks, which is causing them to stall, although they weren't stalled today by any means.
No.
But what we have here is a double top, and today it tried to get up above that resistance and failed so far. And we have the rising trend line and it stayed above that. So we've got a triangle here, and that's the flat line in this case is the weakest. Is that what you recall?
Yes.
So we should
Yeah,
get
it is. Yeah. As we climb up the rising trend, it'll eventually, that overhead resistance will be less strong.
And if it came back down to test this, then this line would be presumably the weak one, the weakest.
Absolutely, with the double top.
So we're still working on a double top, but with a potential for a breakout pretty quick. And let's see. I got this control panel in the way. Let's see. And I wanted to check the 30-year. I'm sorry, this is the 20-year TLT. Again, we've got kind of a consolidation going on in this range right here, and obviously working with the same amount of suspense as the yield. So.
Yep, they're both kind of at decision points, if you will.
Right.
We're waiting for them it looks a lot like gold, just waiting to see if we can get above that 20-day EMA.
We got a rising PMO, so that's a plus. And but anyway, still consolidating. And oh yeah, let's just point out we have the falling wedge, which we normally expect it's going to break out from a falling wedge, break upward. So it's done that, and it really hasn't followed through much after the breakout.
Dollar.
Okay, the dollar is breaking down. Then this is a rising wedge. Not as skinny as I like to see them, but it it had a breakout above the wedge, and then it's breaking down below the wedge. I'm not going to, considering this range here, I'm going to think it's not necessarily decisive, but we do have a PMO top, and well, in the 1 year, that's oversold in that time period, and so possibly look for more downside.
And that, of course, will probably smooth the road a little bit for gold. We can see that that move continue on the pathway downward, lose that level of support there at the 20, and that would certainly have me looking even more bearish as far as the dollar goes.
Right.
All right, well, I'm gonna grab it now and share what I've been watching, and that is semiconductors and renewable energy. I think everybody knows I follow renewable energy fairly closely. Semiconductors have really started to make a move. There's a bunch of reasons that we're hearing in the news as to why that's happening, but let's just stick to the technicals right now. And as you can see, just like with the market, we're having almost a vertical rally here on semiconductors, but we got a breakout today, which I think is interesting. And based on the RSI, we're not really overbought yet as far as semiconductors go. And we have a nice buy signal coming in here. You can see some high volume coming in on this move to the upside. And when we look at the StockCharts technical rank, it's 95.2. So that tells you that the semiconductor index here, as far as an ETF goes, it is in the top 5% of all ETFs right now, and that is the semiconductor SOXX. So it's looking quite good. You can see that it has been outperforming the SPY really since the early part of March, but now getting those confirmations of an actual crossover and a buy signal last week, and the positive RSI. I mean, I think semiconductors still look pretty good.
Before you leave that, they've been complaining for about a month at least, that I've heard, that there's a shortage of chips.
Mm-hmm.
And I've been rather puzzled why it's been moving sideways for so long. But now this breakout now looks confirming that there is some business to be made out there.
Yeah, you can see too that we got with the breakout of price, we also got a breakout on the OBV, which is another great confirmation for that breakout. So as far as semiconductors go, this morning in the trading room, I had Mary Ellen McGonigal from MEM Investment Research joining me there. And her favorite semiconductor is Applied Materials. She really likes this one. I kind of agree with her. It looks pretty good. I'm a little worried about this, kind of parabolic rally that we're seeing on it. But you know what? It's a pretty solid semiconductor. And, seeing the breakout, as she likes to say, winners keep on winning. And of course, with the chip shortage we're talking about, the Biden plan specifically called out putting money into semiconductors. So, it's just one of those areas of the market that looks like it's ready to continue its rally. And Applied Materials, I think, looks pretty good. You can see that it has been outperforming the S&P since early March, which a lot of the semiconductors have, as you can see, the group itself. But what I find really interesting is that Applied Materials is outdoing its industry group. It's outperforming a group that's already starting to do well. So those are the kind of things you want to look for when you're looking at a stock within a very strong industry group. The other one I wanted to peek at here is renewable energy. Here you go. So back on last week, I did put TAN, the solar ETF, on my diamonds list. I set obviously a very deep stop level. You could certainly set your stops at a different level depending on your risk tolerance. But with solar, you kind of have to put in kind of a deep stop because it is so volatile. I'm really not happy with the performance today, closing down over 2.75%. That's kind of a problem for me right now. And then you can also see that RSI turned down before getting into positive territory. So while everything is set up pretty well here as far as renewable energy, it's also one of the areas that are going to be emphasized in the Biden plan. You know, that double bottom looks great. The breakout from the declining trend looked great, but now we're seeing a bit of a pullback. Good thing is that it's still not fallen back into the previous declining trend, and we still do have a PMO buy signal here. So it's, you know, we had just gotten a positive scooter StockCharts technical rank, and, you know, we were not seeing the outperformance that we should have. We did it during last week, you can see right there, but ultimately it's not performing as well. So, you know, it's an area that I think is still, you know, not a bad investment area, but now that, and especially now that we're getting this pullback, but I think we need to just make sure that we're not going to come down and end up with a triple bottom here. So I think this is an interesting area, but now that is a little bit of a problem for me. However, when I looked at Ballard Power this morning in the trading room, this one looks a lot better on the chart than TAN, the solar ETF. So maybe the ETF isn't going to be the best performer, but looking within that group, finding those outperformers is, you know, maybe a way to go. And when you look at BLDP, I mean, I really like that the RSI is almost positive now. It hasn't turned down like we saw on TAN. And we can see that it has popped above its 20-day EMA. There is a double bottom, but it isn't official until we get the break above 2750, that confirmation line. So still waiting on that, but PMO just gave us a crossover buy signal today. You can see, at least in the thumbnail, you've got rising bottoms on the OBV to confirm what we're seeing here. You can see that the group, like I said, overall is not really performing the way it should, but you can see that BLDP has started to make some outperformance moves against the SPY. And certainly if you're looking in that renewable energy space, this one's outperforming its brethren in that renewable energy industry group. So I do like BLDP if you're still interested in that renewable energy space. I mean, this one was up over 4%. Meanwhile, TAN was down 2 3/4. So sometimes it is better to go in within the group maybe and look for particular stocks. But again, renewable energy, very volatile. And, you know, getting into one specific stock in renewable energy, that does carry a lot of risk with it. So something to think about there. All right, let's see. I wanted to look a little bit at some of the sectors before I go into my diamond of the week, because we just talked a lot about technology, and I'd certainly like your opinion, Dad, on what you see on this sector chart for technology. Is there anything there that's popping out at you? I'm putting him on the spot. He had no idea I was going to ask him that.
Okay, well, I'm seeing OBV is totally sick.
Mm-hmm.
So that means that this recent up squirt is not being driven by volume, and it's weak. So that would concern me. Mm-hmm. And let's see, looking down at the lower other ones, the bullish percent is basically overbought now. Silver Cross and Golden Cross, well, the Silver Cross is okay. But look at, here is the technology price going to new highs, and the Silver Cross is down in the low 70s. So concern there. None of this stuff necessarily means you should sell it, but it's just, it's not all peaches and cream.
Right. I mean, when you get these really overbought readings, granted, they can stick around for a little while, but it's, it does give you a little bit of pause. It was a big 2% move today, and the PMO does look good, but when we go and look under the hood, those, that OBV is, that's really not very good looking. I didn't notice that until right now. So, and then one of the other spaces, discretionary, has been leading. And you can see a really nice breakout today, gap up, hitting new all-time highs, I'm fairly certain. RSI is not overbought and it's still positive. So I like what I'm seeing on this chart. We still do have some, an overbought golden cross, but it tells us we do have a pretty good foundation within discretionary here. When you've got 98+% with 50-day EMAs above their 200, you kind of need that if you're going to continue with a rally, that's for sure. Anything pop out at you here?
We've got a negative divergence for the stocks above the 20 EMA.
Yep.
So that's not good.
Right. At least the OBV is behaving better than it was on XLK.
Yes, that is certainly confirming.
All right, so this morning when I was in the trading room, I ran a scan right before I went in, and the number one chart that came up on my list was the autonomous and electric vehicles ETF, and I think it looks pretty good. It looks a lot like some of the other stocks we're seeing in that technology space, but this is a way you can, get involved in this area without having to, purchase a bunch of different stocks to get there. And we have a really nice double bottom here. It's not coming off the kind of decline I like to see when I get a double bottom. I like to really be a deep decline before we form that double bottom. But I have to say that, that RSI is now positive. The 5-day EMA just crossed above that 20-day EMA. Another gap, we had a gap on Thursday and now another gap up. And then you can see as far as the OBV, really nice rising trend here, whereas here it's almost flat. So I feel like that is a pretty good confirmation of this rally that we're seeing on it. And of course, it helps to have a scooter of 96.1 because that means it's in the top 4% of all ETFs right now. So as far as the intermediate and longer term.
PMO, by the way, is got a reverse divergence, which is bullish.
Mm-hmm.
He's got a lower PMO low versus the higher price high low.
Yeah.
So that's bullish.
So if we do get this pattern, this double bottom to confirm, that's going to give us an upside target around $31, basically the height of the pattern added to that confirmation line. So I'm thinking it looks pretty good, but you know what? That's all the time we do have for the DecisionPoint show. I hope you have a good trading week, and I hope you had a great holiday weekend. For Dad and I'm going to wish you all happy trading, and be sure and check out our website at decisionpoint.com.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.